The objective of any of the financial statement is to get a qualitative measurement, not just a quantitative one. Everybody wants to understand the base level financial information that is being predicted, that is being talked about altogether in the future. Tomorrow, if the company comes and gives any excuses saying that why they are not able to perform, people who just want to know about the company, information givers, they want to know about the local economy. Good morning and welcome to the second session of Unit 2 in Ifrs, and we are going to talk about the scope and user information. This is a very important concept where we are going to talk about the information interpretation that's going to be done by each and every user and how the accounting standards is going to pave a way for that. Moving forward, let's try to understand the framework very clearly. The objective of the framework is to get a very good financial statement, that is in terms of the qualitative characteristics that determine the usefulness of information, followed by definition, recognition, measurement of the elements, concepts of the capital and capital maintenance. Let's have a very close look into the objectives clearly before we start going forward in terms of the scope and the user information. The first thing is that the objective of any of the financial statement is to get a qualitative measurement, not just a quantitative one. When you look into any of the balance sheet, you are filled with numbers. You know that there is a lot of subheadings, lot of numbers, lot of values that has been printed all together. But what is happening or what is getting into problem is that sometimes you might feel that these numbers are not meaning anything to me unless and until they are interpreted in the way it has to be done. So somewhere down the lane, it becomes very important that the qualitative characteristics of the statements have to be interpreted the way it has to be done. If it is not done, then it becomes a problem. Following which, the definition. How do you define a statement? How do you recognize a statement? What are the measurement factors has to be brought in. The importance of the financial statement lies in understanding the qualitative factors very clearly. Why? Because sometimes you might start feeling that the statements are not making any meaning for me because they are just numbers. But when the numbers have to be interpreted with the help of some quality, with some information, then the numbers become even more meaningful. So the interpretation here that you need to understand, that you need to go through is more about how the financial statements have to be assessed, has to be evaluated. So the financial statements have to be prepared more in a qualitative manner. They should have some value, they should add on some meaning altogether. Followed by the definition, recognition and the measurement of the elements. How do you define a statement? Now, for example, cost of goods sold. How do you define this cost of goods sold? How do you define inventory? How do you define profit, loss, or every other term that is coming across your balance sheet? So there needs to be a standard definition, a standard method that will actually tell people that this is how the progress has been made. Followed by the recognition factor. Are you able to recognize the values similar to whatever that has been told across in the global standard? Now, for example, in India, suppose we are going to recognize the net profit in a particular manner, the same way it has to be interpreted in Singapore, in Philippines, in Taiwan, in Hong Kong, or probably in other parts of Asia or in other parts of the world. So recognizing a value as a global standard becomes very important part of the financial statements. Followed by the measurement. In what units, in what notation, in what levels are you measuring? Are you measuring it as a full-fledged profit, full-fledged loss, or will it be carried forward? Will it be taught? Will it be taken in terms of a unit value? All those things have to come inside. So this becomes a very, very important factor. This becomes a very, very important thing altogether in terms of definition, recognition, and of the measurement standards altogether. Followed by, we are also going to talk about the concepts of capital and capital maintenance. Every business in this world requires capital, and they require a procedure through which the capital can be maintained. That means the investment levels of the capital always needs to be assessed, and it has to be evaluated on certain parameters. So when the IFRS comes into picture, the financial statements that are going to be prepared, they need to look into every single aspect of the capital, how it is maintained, how are you going to expand it, in what standards are you going to maintain it, and in case if you're going to raise further capital, how are you going to do it, and how are you going to maintain the book of records. All those fractions are going to come in terms of your framework. Moving forward, the framework is also concerned with the general purpose financial statement. We are also going to refer it as financial statement. These statements are prepared and presented at least annually and are directed towards the common information for the whole range of users. So what we tend to do here is that there are general purpose statements also. There are statements which are being used for a common purpose, for a common value or a common setting altogether. So in that sense, in that meaning, when a collective piece of information is being taken forward, this will be used as a standard, this will be used as a fraction altogether in order for the people to understand, for a whole range of users. When I talk about the whole range of users, these are all the users who are from different background, who are from different setup altogether. They are not from the same way, they are not from the similar background, they are not from the similar factors here. They are from different range as far as possible. They are from different factors, they are from different caliber altogether. So that's why I would say that these factors will matter a lot when we are talking about this entire range of users. Followed by, some of the users may require and have the power to obtain information in addition to contained in financial statements. Now, when we talk about investigating agencies or when we talk about credit rating agencies, they always have a need of going beyond the balance sheet because they want to understand certain specific factors out of it. Now, a balance sheet might be presenting you only about the day-to-day information, or a balance sheet might give you only the operational standards that has been followed in the company. But as an investigating agency or a credit rating agency, I might have certain specific questions which cannot be answered by a common balance sheet. I want to go in depth. I want to know what has exactly happened in the company. So at that point of time, using the power to obtain information becomes a very, very crucial factor. So that is also going to be covered under the IFRS standards. Followed by, many users have to rely on the financial statements as a major source of financial information, and that is going to be used again by the investors, by the bankers, by the creditors, and every single person who's involved in the activity, in the business altogether. So today, if you look into the market, most of the people tend to look into the base level financial information. Moment you are able to see a balance sheet, moment you are able to see an AGM of a company being rolled out through the media or through any other channel, everybody wants to understand the base level financial information that is being predicted, that is being talked about altogether in the business. Why? Because there is a time, there is a standard which comes into picture. People want to know what is happening with the company, why it is happening with the company, and what is the importance that we are going to derive out of this particular financial statements. So moving forward, let's try to understand the financial statements also form a part of the process of financial reporting. Now, statements are just the documentation. You need to take the documentation and report it, which means you are going to take it and you're going to present it to the world in a particular manner. Followed by a complete set of financial statement. Normally, what will it include? A balance sheet, statement of profit and loss, cash flow statement and the other notes and statement that are being explained properly for the user. So what we are now trying to say here is that you have prepared statements, you have prepared documents after documents talking about your financial status, about your financial ability and the criteria factors here. But then what happens here is that you need to take that data and present it to the world, which means that will have an entire catalog of information that is being put together. And that catalog of information will be your balance sheet, your cash flow statement, your profit and loss statement, your fund flow statement. All those kind of things will become a part of the attachment, which has to be presented in a particular manner, in an understandable manner, so that they form the integral part of the financial statement. You also are going to include the explanation part very, very clearly. You are going to tell what are all the factors that are concerning here. Followed by, they might also include the supplementary schedules and information based on the derived form, the expected form to read with, such as, the statements, the schedules, the supplementary information that is provided. All those factors are going to be looked in, because in the financial information, for example, it might be about the business, it might be about the geographical statement, the disclosures in terms of the price, effective prices, changing factors, all those things that might be bought in. So these are certain things, these are certain factors which you can see here as a part of the information cycle. So what we are trying to understand, what we are trying to guess out, what we are trying to move forward is that you will be able to get additional information to what has already been told, what has already been explained in the scenario, but then these are something which people would like to read with, and they want to understand something better than the usual. Now, moving forward, we will also try to understand this framework is applying to the financial statement to all the reporting enterprises engaged in commercial, industrial, business, or you are a public enterprise at all. So a reporting enterprise is one which will comprise of all the financial statements as a major part of the information altogether. Now this is important. Why? Because you might be a governmental organization or a private organization or a public-private aided organization. Whatever kind of enterprise you are, you will not be able to sit back and say that, sir, I am not ready to present my financial statement. You will go through the same churn, you will go through the same procedure of preparing the financial statements, and your financial statement need to have the same kind of statements, same kind of factors overhead, so that you are able to get a common size, you are able to get a common factor altogether. So the IFRS clearly says to each and everybody who's involved in the activity of auditing and accounting that they have to prepare the balance sheet, they have to prepare the supplementary information, and they have to give out all the possible documents which will support the criteria in terms of building up the enterprise. Now, moving forward, now let's try to understand the information factor here very, very clearly. The users of the financial statement include and present the potentiality in terms of investor, employee, lenders, suppliers. So many people are there, including the customers and the government. Let's try to understand from the perspective of each and every people, what is their ideology, how do they interpret the financial statement. Starting with the investors, they are the people who are going to provide capital, and they are concerned with the inherent risk that is involved with the business. Now, for example, when people come and talk about Tata Motors, or people come and talk about Bajaj Finance, or people come and talk about Sun Pharma, the investors who have put their money into the company want to exactly know how is their money performing, how is the company performing altogether. Tomorrow, if the company comes and gives any excuses saying that why they are not able to perform, why the shares went down, what happened to the capital, people are not ready to listen to that. People want to know that if I am interested in terms of investing in your company, the company needs to give me each and every data about the performance. So that's why investors will form a very, very important part. in terms of understanding and interpreting the information. They are also interested, which enables them to access the ability of the enterprise altogether. They want to see the performance. They want to see that whether whatever they have invested turns out to be a potential return for them. So further going, they might be able to invest, they might be able to add on their investments to the companies or group of companies. Followed by the employees factor. The employees and their representative groups are interested in information about the stability and profitability of 14 framework that has been issued in the year 2000 to their employees. Now, this is a very, very important factor which was established, issued in the year 2000, and it has been given to the employees altogether. Now, why is that? They are also interested in the information of how is their own company performing. So, for example, let us take Infosys or TCS or Wipro or HCL, or when we are talking about any other companies, their own employees want to invest in their company shares. They want to know, they want to understand how the company is performing, on what basis they are doing well, what are the factors that we need to look in, how the company is trying to enable them in terms of growth. All these factors will matter a lot. So that's why I always say that this is a segment, this is a factor. This financial statement will be definitely of greater use, of greater value, not only for the investors, not only for the employers, but every single person who is concerned with the company. And from the employee standpoint, they want to know the money that has gone in terms of remuneration, retirement benefits, how is the money that is being utilized, and what percentage of the money is being paid back to the employees in terms of benefits, in terms of growth. Followed by the lenders. Now, lenders form a very, very important factor, and every lender will try to understand whether they are in a position of getting their money back from the company. So when they read through the financial statement, that will actually tell them the financial health of the company, the performance of the company, how they have been able to do, under what basis they have been able to do, and what is the performance level. So today, if a lender wants to know whether his money is secured enough, is he going to get back the money in stipulated period of time, he will definitely go through the balance sheet. He will find that the loans that have been given, will it come back on time? Will they have the position to get it back altogether? So all this factor is definitely going to matter in terms of the financial statements. Followed by the suppliers and the customers. Most of the suppliers who supply the materials to the company, like other creditors, are also interested in this information. Why? Because that gives them when will the due be paid, what is the collection cycle, what is the inventory standards, in what level they are doing the accounting, how are the lenders being serviced, how is the creditors being serviced. All those factors will start coming here, which is a major cost for the suppliers, for the customers to get interested here. Now, for example, if an industry is undergoing some strike or some kind of problem altogether, and they are not able to retrieve the information, they are not able to understand the information factors, then the suppliers will get worried, because if I supply the material there and I am not going to get the money back on time, that's going to be a deadlock situation for them. So the suppliers want to know what is the amount the company owns. Are they paying on time? Are they able to get back the credit on time? So all these factors will be a matter of importance for them. Followed by the customers itself. Who are the customers? The people who are enjoying the end product of the company. So the customers will have an interest of information about continuance. They want to know how far the company will continue, in what rate they will continue, what is the involvement that is happening with the company. And if you especially see, the long-term involvement matters a lot. Why? Because many times when they start thinking about the involvement, they also have the ideology, the factors here, that whether I need to see this company as a potential growth company, or a company which is being destroyed, or a company which will not stand back. So we have to understand every movement of the company, and that is possible only if the financial statements are in place. Followed by, we are also going to talk about governments and their agencies, because government are also in requirement of the information. Government wants to know how the company is performing, in what ways they are contributing for the economy. So what are the standards? What are their activities? What is the level of work that is being done? So government will also be interested in terms of knowing the performance at each and every level, followed by the public, because public involves the investors, the people who just want to know about the company, information givers. They want to know about the local economy. They want to gather the basic information of how the enterprise is performing, what are all that needs to be understood as this company. So every brand image comes into picture. So when you talk about companies like Tata or the Birlas or the Godrej or the JSW, these are all public companies. They have a lot of image and brand equity in the mind of people. That is because their frequent understanding, frequent coming out in terms of reaching the minds of people, attaching themselves with the media. So all those factors will be looked into in terms of your financial statement. With this, I come to the end of this session. I hope and believe that all the information provided in this session is of a great help and resource to you. In the upcoming sessions, we will be seeing more about the IFRS standards in terms of building up the profit and loss statements, the balance sheet, and other factors. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me on this wonderful session.